So, what are three stocks that each offer a 20% ROI that have recently pulled on back, and for them to not be pump and dumps or random stocks, that all of these either be blue chip stocks or quality ETFs? Let's go ahead and talk about it. I really hope that you learned something new, and feel free to let me know down in the comment section which one out of the three, if any, is your favorite. So again, my goal is not to encourage you to trade any of these, but I really hope that as we break them down, and if any of them actually end up meeting your criteria, that you can add them to your watch list, follow up with them, and see if they're ones that actually end up being ones that you actually want to either trade or invest in. The first thing that I want to talk about is, well, why? Why has the market recently pulled on back? It is understood that a lot of big investors are rotating out of big tech. Big tech has experienced an amazing uptrend for 2024 and even 2023. I want to show you this. This is on the day chart. This dates back to even 2022. We sold off a lot in 2022. In 2023, we began to indicate signs of an uptrend, and we've been on a strong uptrend rally since then, trading above the moving average and trading above the EMA line. Now, just recently, we began to trade below the EMA line. So one thing that I want to make very clear is that none of the three stocks that we talk about in this video actually have to recover. But this video are for those that believe that the market's going to continue to go higher for longer. And if so, which blue chip companies that are quality companies offer a 20% ROI? So again, things can always get worse before they get better, but I wanted to make sure that I talked about, not just all of the good, but also some of the risk involved as well. The first one that I want to talk about is TQQQ. Just so you can see, I carry no open position. I'm sorry, I carry 38 shares. I don't know why I have 38 shares left, but this is TQQQ, and this is a triple leverage ETF that follows the NASDAQ market. So anytime that the NASDAQ market moves up 1%, this one moves up 3%. If the NASDAQ market moves down 1%, this one moves down 3%. Make sense? The really cool thing about this is that, again, if you really do believe that the NASDAQ market's going to fully recover, then this might be something that you might want to look into. This is TQQQ, and from current price levels, it offers about a 21.79% ROI. And again, it recently pulled on back as investors began to rotate out of big tech. When big tech begins to sell off, this follows the QQQ, which is the NASDAQ ETF. NASDAQ 100 is made up of mainly some of the most valuable tech companies that are publicly traded. With that being said, there is no indication of support. This thing could continue to go lower for longer. And I would personally want to wait for signs of a reversal. We talk about it in the LPP lesson library, where there's three stages of a reversal. There's the rejection stage, then there's the consolidation stage. Consolidation is kind of when it begins to trade sideways, when there's no more progress on the downside. I don't know if we're really just there because we kind of are still testing that same previous low. And then the confirmation stage is when it actually begins to indicate signs of a reversal and recovery, progress on the upside, right? So that's when we can begin to trade above, $75 per share, working our way back to break above EMA and work our way back to $86. That would be the first one that I wanted to talk about. The second one is Tesla. So Tesla recently pulled on back, and Tesla has been going through a little trading rut in 2024. I want to make sure that we make you all aware of that. There's definitely huge gap down potential, especially if the robo-taxi event that's now set for October, I think. So it was set for August, and then Elon pushed it back. So if he continues to push that back, then this thing can definitely get much worse before it gets better. But again, this thing gapped up about 50% within just about 3 to 4 trading weeks. So it became very overbought and very overextended within a short period of time. Now there's gap down potential. But if you think that the market's going to recover, then from current price levels back up to previous highs, I'm sorry. Tesla is not one of them. It's actually NVIDIA. Oh my goodness. I was looking at Tesla and I was like, man, it doesn't really look like it offers about 20%. It's NVIDIA that offers 20%. NVIDIA is testing previous support levels. I'm sorry. I guess I just wanted to talk about Tesla because when I was looking at this, I was like, oh man, from 240 to 270, is this really one that offers 20%? I'm sorry. No, it is one that's oversold, but it doesn't offer 20%. I do apologize for that. I'm going to keep on going though. So NVIDIA is one that is, again, the juggernaut of AI, right? It's the company of the year. It's where all the attention has been going to. And at one point it became more valuable than Apple, right? We are showing signs of support. We've shown signs of support here before, not just back when we broke above 117, but also when we pulled on back, and we're testing that same support range. Just because it's validated it before doesn't mean that it has to validate it again. I just like to make you aware. If you think that this thing is going to recover, then it does offer about a 20% ROI if it goes back to previous all-time highs of 141. But if it does break the support, because of how quickly it gapped up, it does have some downside potential. So all I ask you to do is, before you actually take the trade, make sure you plug it into your risk to reward ratio calculator. You calculate and formulate your exit plan, both for the good and for potential cutting losses, because we all know that not every trade can go according to plan. But this is definitely one that's been on my radar as it's been pulling on back of a stock that I wanted to pay attention to potentially buy the dip on if it actually began to show signs of recovery, right? And one of the last ones that I wanted to talk about is AMD. AMD recently pulled on back from overall lows of 151, and it looks like, again, this is a previous support range. If it does end up recovering to previous highs, this thing offers a little bit over 23% ROI from current price levels to previous highs that it was just at a few days ago. Now, again, just because it was here a few days ago doesn't mean that it needs to return back to that level. Looking at previous patterns, it has been to even lower levels of 145 to 144. So please make sure you take that into consideration. This thing is not as bullish and as resilient as Nvidia or even the NASDAQ market. It has been struggling a little bit more. And I would say out of the three, I would view to be one of the riskiest out of the three, just because it's the most volatile. Nvidia and the NASDAQ market, as TQQQ follows the NASDAQ market, has simply been more consistent. Now, consistent doesn't mean that it can't break its pattern. It just means that it has more of a common trend. And if there's a break of trend, it's more easy to identify that. These are a little bit more of a wild card because they're kind of all over the place. But it's good to understand overbought and oversold level. And I think it's pretty safe to say, looking at the RSI, looking at the MACD, looking at previous lows, and looking at where it's currently at, it is oversold. But the cheap can always get cheaper, but definitely it's a stock that at these levels, I can see why people would add it to their watch list and potentially consider buying some in case it does begin to recover. I wanted to keep today's video super short and sweet. I just want to talk about 3 stocks that offer over 20% ROI. If we wanted to throw a curveball in there and you wanted to really risk it for the biscuit, that would be SMCI. Feel free to look into it. I view it to be one of the riskiest out of all. It's almost like a more volatile NVIDIA. And if it returns back to the same previous resistance that it's been testing, it's kind of in this consolidation stage. Do you guys see that this channel of support right around 720 and resistance right around 950? But this one definitely offers 20% ROI. If it breaks support, it could aggressively sell off. If it breaks this resistance, it could aggressively gap up. But SMCI has been one that's been talked about quite often. I personally am not the biggest fan of it. I've voiced it before, but my opinion aside, I can 100% see why someone would add it to their watch list, maybe to consider buying some at these lower levels for a swing trade to lock in profits at previous levels. So again, removing my opinion, I just want to make sure that I talk about what stocks offer opportunity that have made some people money that know how to enter and exit a trade successfully. So other than that, again, I talk about all of these different concepts live every single morning. I actually trade live every morning. So imagine watching this video just like you did, but me actively trading and explaining my thought process behind every trade I take. Just like in this video, if you like the way that I break things down, I really do think that you'll enjoy my live trading sessions where you get to see every entry, every exit, and every thought process behind every trade I take. If you want to tune on in as soon as Monday, it's the second link in the description down below. It's a one-time payment, lifetime access, and you'll be able to watch me trade live every single day, especially before prices go up on September 1st. So again, if you want to sign up right now, second link in the description down below, and I'll see you on Monday at market open. Until then, like always, let's make sure that we end the year on a green note. Take care, team.